to that. There's a link on the. Oh, I've not been. So let me start from that beginning now. So this is interface of tax Promax, like I said. So I'm going to explain this interface very quickly. So this first one is tax 6 due. So under this tax 6 due, you are going to see VAT, which is value added tax, and you're going to see company income tax. You're going to see the year, accounting year end. You are going to see the assessment number. You are going to see the range, that is from which year to which year, that is the period. You are going to see the status, maybe post due and the like. Then you're going to see the filing, if you have already started filing it or it's still pending filing. Then payment, if you have made your payment. No, I'm not opening the value added tax. I'm still working on the interface of the tax Promax. Can you see that? So you are going to see action and you are going to see process. So assuming you want to file this thing now, assuming you want to file VAT or company income tax, all we just have to do is to click on what? On process. And all the information will open by the side here to us. But we are not working on that for now. We are still on interface. Then there's also what we call group taxes. If you click on group taxes, you are going to have return on previous submitted, withholding taxes. This is where you're going to file your withholding taxes. You want to file your withholding taxes. If you want to file your pay as you earn, that is your payee. This is where you're going to file your payee. If you want to file your withholding tax, that is, this one is withholding tax at source between the oil and gas company and the government agency. Okay, you know, if you go back to my videos on YouTube, you are going to see how I explain withholding tax VAT. Abby? So this is where they are going to VAT, they are going to file that tax. Then stamp duty as well. Okay, I'm with you. Yes. So the one of FRS here is the resident in Abuja. You understand? This one is for Federal Republic of Nigeria. So Abuja. This is where you're going to file it. It's still the same. This portal you are seeing is tax Promax for portal, right? And who is controlling it? So if you want to file their payee, this is where you're going to file their own payee. Yes. It's because you're not the one filing it. Were you the one that filed it, the payee? And this is where they are going to file it for you. Yes. Yes. You file that one with the state government, state taxes. Are we good together now? Are we together? Then the stamp duty as well. We also have foreign payments and the like. So that is for group taxes. And that is why we call it group taxes. It's not for states. Then you come back here. We have additional assessments pending. If you click on this, you are going to see different type of additional taxes, maybe after tax audits. And you have additional. Maybe your provision you made last year was 20 million naira. But when they did their tax audit, they noticed that your tax is actually what? 25 million naira. So it means there's at least additional tax you are going to pay. So you see that one here, if you have paid it or not. Okay. Then let's open another aspect of it. I think I'm having question here. Sir, can payee to the state government be filed on tax Promax? No, 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 no. No, please. So that's why you see Lagos State has its own platform to file your payee. If you want to file for your employee, your staff. Exactly, exactly. Then we also have credit reports. The credit report here is talking about, let's open it. It's talking about withholding tax credit notes. You know, when your customer or your vendor withhold tax from you, what will happen to them? They will need to go and remit it on your behalf. So once they remit it on your behalf, you see what they have remitted on your behalf here. This is under credits. Can you see it? So once you click here, you are going to see all those information necessary here as well. Yes. So you are going to see all here. You can see withholding tax and the VAT. You know, they can withhold VAT on your behalf. That is oil and gas and government agencies. You are going to see that one here if you fall into that category. If you are just ordinary company that they just withhold tax from you, ordinary withholding tax, you're also going to see it here. Are we good to go? Okay, fine. Then if you have capital allowance account, you are going to also fill it here. You know, maybe previously you're unable to utilize the whole capital allowance. Maybe last year you have 20 million profit and you have 50 million withholding 50 million capital allowance. So it means you will not pay anything in that year. Your tax will be zero, but you still have 30 million naira as carry forward capital allowance. So that one will be here as a balance. Okay. They are still going to have what we call loss relief account. So if you have anything like loss relief account, you're also going to have access to this one here. Can you see what I'm sharing? Physical. Can you see it? Fine. So you're going to see loss relief account as well here. So if you still have privilege of carrying your losses for the next year, you carry forward, you see the balance here. Okay, that is for that area. Now, after that, let's go to taxpayer details. The taxpayer detail is talking about your information. It's talking about what? Information. So what is the name of the company you are filing for? You use this one. If this is the name of your company, then the date of incorporation date, your ID, tax ID is going to be here. Then the address of the company is going to be here. Then the local area of the company is going to be here. Then the state of the company is going to be here. You are going to have if the company has been registered, CAC, you put it there. Then what type of corporation do you have? You put it here. Then phone number of the contact person, you put them here. What is the contact email address, status of the contact person, business status, then dates created, last updated, all this necessary information will be there. Current address, and I think all these things you can fill them up on your own by the time you register on Tax Promax. Are we good to go? Any issue with this one? No issue. So let's go to tax 6 deal now. Tax 6 deal. So once you get to tax 6 deal, you click on proceed. Let's start with company income tax. So company income tax, you click on what? On process. Once you click on process, there are 16 schedules under company income tax. How many schedules? 16. And you must fill all the schedules one by one to the end. You must fill the schedules one by one to the end. Just mute your mic if you are physical here, so you can just hear me as we go on. So We are going to fill all these schedules one by one. So we are going to start with revenue. You click on revenue. So once you click on revenue, please don't forget, don't click on the status. Don't click on this. If you click on this, it will remove that schedule away. Please mute your mic if you are physical. You can hear me here, so there's no need of. So I will click on the revenue now. And once you click on the revenue, what do you see? You are going to see currency, Naira, GBP, US dollar, CFP, and Euro. Yes or no? So depending on which currency are you going to report on. So if I want to report, I want to file on Naira, my report, my audited financial statement has been reported in Naira. So it means I'm going to click on Naira. And I will advise, before you start this process, make sure your account has been audited. Because once you finish updating this, once you finish putting all this necessary information, there's going to be a place you are going to upload your audited account. Once you upload it, then it's going to give you the necessary information you need to. But you must have finished filling all these schedules from 1st to 15th, while the 6th one will automatically calculate itself, which is capital allowance aspect. So now I will click on Naira and I will click what? Proceed. But before I click on proceed, how much is my revenue? I will type the figure here. Are we good to go? So if my revenue for that year is 20 million, I will type 20 million naira there and I'm good to go. Then I will click on what? On proceed. So once you click on proceed, you are good to go. But I will not click on proceed. I will come back here and click on the next schedule. What is the next schedule? Non-current assets. Non-current assets. And it's not going because I am yet to input anything on that revenue. You can see that as I'm clicking on non-current assets, it's not clicking. So it means I will need to, what I'm going to do is that we are going to put just a figure. But at the end of the filing, we will not click on submit. Do you understand? So that you not look, it will not go and scatter the. So let's use how much do you think our revenue is? 100 million naira. 1, 2, 3, 1, 2, 3. So once you click 100 million naira there, you click on proceed. Apply this permission to all the future required. Someone is trying to deny, someone is trying to record my. Please select one of these points. Okay, I've not, oh, sorry, I've not clicked.
This is the Naira, yes, yes.
So I click on Naira and I inserted the 100 million naira. Then you proceed. So you can see that it automatically takes us to where? Non-current assets.
Non-current assets, yeah.
So I'm going to click on addition. If there's any addition in the year for that asset. So if there's any addition in the year, let's assume there's an addition in the year. Let's assume we have tangible assets. You click on addition, you click on this here. Can we all see where I click? Then you click on select. Let's assume it's building industrial. No. We are using live company now. But I will not click submit, but I'm clicking proceed. But at the end of the filing, you must click submit. So once you click submit, that one has gone. Are we clear with what I'm saying? Okay, fine. So let's click on building industry. Then what is the description? Building, let's say, or let's click on something like if you can get motor vehicle. Let's look for motor vehicle expenditure, Abby. So what is the description of that motor vehicle? Let's call it Toyota. Toyota. That is the description of that vehicle. Are we good to go? So after that description, what do we have? We have to pick the date of purchase. When do we purchase the asset? This thing we are filing is 2022, Abby? Yes or no? So it means the addition must be within 2022. So we can say we have to click back to 2022 years of account. So let's click is on November. So let's click November 1st. And everything is there. What is the cost of that motor vehicle? If the cost of motor vehicle is 50 million naira, or let's say 5 million naira, 1, 2, 3, 1, 2, 3. Now we are going to click on the rate. What is the depreciation rate we are using? So for vehicle, different organizations, each organization has their own rates differently. So you can decide your own rate will be 20%, your own rate will be how much? 25%. So for this motor vehicle, I think we can use 20%, Abby. So don't forget, you don't need to put percentage at the back of this. All you just have to put is the number. And once you click on that, just click on what? Proceed. If you have additional assets you want to add, just click on add record. Are we good to go? So I will just click on add record. And once I click on add record, let's go and look for it. It's there already, Abby. Toyota, 5 million naira. If I want to remove it, I can just remove it right away from here. Are we getting that logic now? So next thing to do now is to click on depreciation. Immediately you calculate, immediately you add new asset. The next thing to do is to calculate the depreciation immediately. So now to calculate the depreciation, what are we going to do? Will we enter the depreciation? How much should be the depreciation? If you calculate the depreciation, that should be 1 million naira, Abby. 1, 2, 3, 1, 2. Yes, that one have been calculated already. But in case you are not, Tax Promax will calculate its own depreciation here. Yes or no? Then, don't forget that all this information we are filing, we are getting them from where? From the audited account. Yes or no? So what the auditor has calculated as depreciation for that year might be different from what the Tax Promax will calculate for depreciation for that year. Do you understand now? So if what the audited account is saying is different from Tax Promax, just put the one of audited account here. Where I inserted this 1 million naira. So by the time you put this one now, add, you will see that it has already added the depreciation to it. 20 million, which is, yes. Yes. You know, if auditor used 500,000 for that year, they are calculating that, see, if you look at this Tax Promax now, when we are inserting this 5 million naira for motor vehicle, we said that motor vehicle was bought in November. But when Tax Promax want to calculate, the Tax Promax calculated it as a year depreciation. If auditor want to calculate, they will not use the whole year depreciation. They will only calculate 2 months of it, Abby. So that is where the difference is going to come from. So once you insert the one of audited depreciation here, Tax Promax will agree. Okay, so that 2 months will be how much? That will be 200. Abby? So if you say it's 200,000, 1, 2. So you can see that it has changed it to 200,000. So you obeyed what you have inserted. It's going to calculate its own, no. But if you say, Mr. Man, what you have calculated is wrong, it will calculate your own. Because you have, immediately you are done filing this thing now, you are going to upload the hard copy of that audited account on this system before you can submit it and make payment. So what you have what you are going to upload and what you have inserted on tax Promax must be the same figure, must agree. Are we getting that now? Okay, so should we leave it as 200? Okay, so let's continue. Once you are done with this, all the addition, just click on what? Proceed. Once you click on proceed, it will bring you back here. So it means you have calculated both the depreciation, and you can see, and this is motor vehicle and every other thing. If you want to remove, if there's a mistake, you can remove it straight away from here. Then once you are done inserting your assets, you click on what? Proceed. And it will take you to the next page. To take you to next page. Next page. So you can see the item on the list. We have calculated the Toyota and the depreciation is 200,000. Do we need any other thing? There's no. It's talking about what? Okay, so the description field is required, the cost. It means no, it's because we are saying add record. So if you want to add record, you must put, just like what we did to that motor vehicle. You have to put all the information there before you click on the proceed. But now we are not adding any record again, so just proceed. So it's supposed to take me to, which one are we filing? We are filing this. So we have filed this revenue. But the funniest thing is that we can't go to current assets if we are yet to finish this non-current asset. So let's click on current asset. Does it open? It will open until you finish this. So is there any disposal? We have done the addition, but is there any disposal in the year? Do we have anything like disposal in the year? No disposal. So since there's no disposal, okay, maybe we should change that depreciation to 1 million naira. Or let's click on proceed. I think we have, okay, depreciation charge for the year. Okay, so this is total entry. Where is the motor vehicle we just calculated? This is motor vehicle. So it means we are going to do depreciation for each of the assets. Okay, so let's click 200 for this one, Abi. 200,000 for this one. 200,000, 1, 2, 3. Add record, which is fine. And then next one is proceed. And it will bring us back to this one. We also click on the second one. Let's also call that one as 200,000, Abi. You know, all this depreciation you are charging, they are depreciation charge for the year, which has to be there. So we also click on that, proceed. You can see that it has already marked 2 for us now. So we have 1 left. So depreciation charge for the year, 200,000. And you click on add record and you proceed. So now all the assets have been ticked for us. So the next thing to do now is to click on what? Proceed. And once you click on proceed, it took us to where now? The total. So it means our total cost for that year is how much? 15.6 million naira. And the total cost. Why the total depreciation is how much? 400, Abi. We didn't charge one. Okay, so no problem. But we all know what to do with that, Abi. So that is 400,000. Then the net book value is how much now? You have to cross-check this also with your balance sheet item. You know, property, plant, and equipment will be there. So you have to cross-check that what you have inputted here, what you have input here is correct. Align with audited account, one by one. Then after that, we are going away from non-current asset to where now? The next schedule is current asset. So just click on current asset. Okay, so they want you to share this depreciation. Either everything is going to cost of sales or everything is going to operating expenses, or you want to share it 50-50. So if you want to share it 50-50, if you put 50 here and you put 50 here, you will see that it's going to give you 200. Are you getting it now? You know, there are some companies that they recognize their depreciation as the cost of sales. Why some? They just put it on the admin straight away. So that is what the tax is saying here. Eh? It's not that time because this is the first time. It's not time consuming. Once we understand it, it will be faster. So you can see that it has taken us to where now? Current assets. So from these current assets now, you will now start taking it one by one. The first item here is what? Inventory. So from inventory, you click amount of the inventory. How much is the amount of inventory? Based on what you have on your audited account. Let's assume it's 500,000 for our inventory. 500,000. If there's any other thing we have more current assets, what are we going to do? You click on add. I mean, if you have additional inventory, you know, we can have raw material, we can have work in progress, and so on. So you put them here and you click on add. So let me just ignore this. That will have been in audited account. You must use the audited. The auditor must have worked on it before you start filing it. Okay, so you click on proceed. Once you click on proceed, it will take you to where? The cost of sales. That's the next schedule. So once you click on the cost of sales, you are going to see raw material. That is the opening inventory. If you have anything like opening inventory, you put it there. You know, to calculate the cost of sales, you start with opening inventory, purchase for the year. If there's any carriage, you add to it, then you less your closing inventory. So by the time you less your closing inventory, whatever you have at the end is what we call cost of sales. So that is the same thing you are seeing here. So you can see that because this 200,000 from the depreciation, we divided it into 50-50%. So 50% of it has already come to where? Cost of sales. The remaining 50%, you will meet it when we get to expenses, under operating expenses. Okay. And we can just input any figure. We can put 3 million here. Okay. If there's no inventory, just put 0. So if the company you are filing for is no, so just put 0 for them. It will also agree. It will go on with it. So for this now, let's assume these people have inventory. Opening inventory is 3 million naira. 1, 2, 3, 1, 2, 3. And this inventory is divided into 3 parts now, Abi. We have work in progress, raw material. And so if there's a company that has all these 3 categories, you put it there. But let's assume that this company doesn't have other categories. So let's assume it has only raw material. Are we good to go? Okay, so you go to the next one, add purchase. So if there's any purchase in the year, let's assume we have 20 million purchase or let's say 10 million of purchase. 1, 2, 3, 1. So you can see that is automatically added to total here at the front of it. Okay, so if there's any carriage, you will add the carriage. Okay, so let's say carriage is 100,000. 1, 2, 1, 2, 1, Abi. So once you add it, it will take it here. Return and outward. Return, Abi. You want to use your own money there. Okay, so return outward is 20,000. Reclassification, let's leave that one. Depreciation, that one has been here already, Abi. So let's say our closing inventory is 1 million, Abi. Let's assume it's 1 million naira. 1, 2, 3. 1, 2, 3. Okay. So if our closing inventory is 1 million naira, you know, it's less closing inventory. And if you look at it, you see that there's a negative beside that 1 million naira. So from there, if there's anything like direct labor, you put it there. But now, as of now, our total cost of sales is how much? 12,120,000. Immediately you arrive at this level, you go back to your audited accounts and cross-check if that figure is the same thing. If it's not the same thing, you have to adjust it immediately. Are we getting that now? Okay. Tax, exactly. Are we getting that now? In tax compliance. So they want to calculate, you know, to calculate tax. By the time we start next week, the one we want to start next week, when we get to that calculation of tax, they are going to say how we are going to calculate tax from the beginning to the end. So the major factor in calculating tax is the profit for the year. And what we are trying to do now is to adjust our profit to tax. Exactly. So you have inputted that's why they allow you to input your own depreciation you have calculated. So immediately you get to 16 schedule, that one will calculate capital allowance on its own. So they will add back depreciation and deduct the capital allowance automatically. Okay. On tax Promax, and you just no, before you submit, so before you click on submit, you must check audited account. And no problem, just come to the where it's affected, the schedule it's affected, and click on it and edit it. Yes, now. Yes, now. That's why you can see. What do you see here? Can we all see? What do you see? Remove. So it means you can edit, you can remove whatever. Okay, so I believe we are together again. Let's continue from where we stopped. So are we good to go now? Do we have any other question? So you are free. So you are free to add, you are free to remove any information that is not correct when you are filing. So if you notice that You have inputted, I mean, you have wrong information in that, so you can just remove it. Just remove it straight away from the tax promise and you are good to go. So I want to try to log in so that I will follow what is going on online. Okay, so let's continue. All you just have to do now, we have our cost for that year, which is 12 million naira. Just click on proceed. Once you click on the proceed, it will take you to the next schedule, which is what? Which is tax, which is a tax, other income, Abi. So if your company have other income, you will input it here. So maybe they dispose an asset in the year, or there's a side hustle in the year from the company. So you just put it there. So let's assume there's additional income, maybe like investment income. So do we have anything like investment income here? Let's say interest income, Abi. So let's assume that one is
interest income.
Okay, fine. So let's assume that one is 1 million naira. So if you look at it, you will see that it's here already. Any other thing you can think of? Let's assume that there's bad debt recoverable or recovery. You have already written up bad debt in the previous year. That Mr. So cannot give me this money again. You write it off. But later in that year, you just jam Mr. So. My money, and he was able to give you at least 100,000 from that amount he was owing you. So let's assume we were able to recover how much? 100,000 in that year from that Mr. Man. So that one also has been updated. So our total order income is 1.1. So the next thing to do here is what? Click on proceed. Once you click on proceed, so we are going to have what we call operating what? Expenses. And you are going to fill all this schedule one by one. So if there's nothing like that, you will just put a 0. So I will click on that. Then recipient, relationship, description of service, and the amount. So let's say Mr. Bayo Abi, Tayo. What should I put? Mutairu. Okay, Taiwo.
Matthew.
Matthew, okay, no Allah. So their information will be there. Then the relationship, customer. Then description of service. If the service is for, what is it for? Let's say fueling, Abi. Then how much is that? Let's say it's 300,000. And you are good to go. So if there's no other thing about this, just click on proceed. It will take you to the next schedule. So another next schedule, interest on loan. So you also click here. You continue to fill it one by one like that. Interest on loan, is it from GT Bank? Let's say GT, Abi. Let's say you borrow from GT. How much is this principal you borrowed? Let's say it's 5 million naira you borrow. So what is the nature of the loan? Local. Then what is the period of the loan? Let's say it's 2 to 4 years to pay back. Then what is the rate of the interest? If it is 10%, it you just calculate that. Don't forget, you don't need to put percentage. Just put 10. Are we good to go? Once you click on proceed, it will calculate that interest itself. Don't forget, we put 5 million here. So by the time you click on this now, rents, let's leave this one, Abi. Everything is still the same thing. Just put the amount, the period of that rent, and the necessary dates. Okay. This one is talking about what? Rate, what is it talking about? Rates, Abi.
Talking about
You know, we have rent, we have rate, tenement rate, and the like. You put it there, you click on proceed. The next one is director's emolument. So let's assume that our director is, name of our director is who?
Matthew Thompson. Mr. Matthew.
Okay. Okay, don't worry. We are going to have more than one director then.
All right,
So
sir.
we are going to have one director one. Sorry. I have to remove it. Okay, so let's continue. So our first director is Tayo. Then T number. You must have your T number so that they can track you and pay our tax. So let's have our let's just put any figure here, Sha. Then what is the percentage of interest? Let's say he only owed 20% of the company. Is it better, Abi? Then let's say the interest preferred, let's say it's just 2%. Then amount of compensation. Let's assume he's collecting just 1 million naira. So then if you have additional director, if you have two directors, just click on add record. So you put Thompson. I hope I'm getting it. Thompson.
Yes, sir.
So Thompson is another.
Yeah,
so that's another director we have. Then let's put the T number of Mr. Thompson. Then let's say Mr. Thompson is also owing 20% in the company. Let's put this one 5%. How much of the compensation are we giving? He's also collecting 1 million as well. 1, 2, 3. So we can remove them if we want to remove them. So all we just have to do is to click on what? Proceed. And you take out the next one, donation. So if you give donation, description of the donation, who is collecting it? So if you give this donation to non-approved body, you know that they will have it back. Automatically they will have it back. But if you give it to like orphanage, if you give it to like who again, NGOs and the likes, those who are registered, those who are approved, not all, yes, then they will approve it. But if you give one to your pastor, or you give it to your political party, you are PDP or APC, they will disallow it. Those who are doing what? Relative. Donation, no, that one is not allowed. That one are normal expenses. So we add back. It's supposed to be part of the, except if you post it where they will not know. And if they have the opportunity to check your ledger very well, by the time we start the QuickBooks now, you will see more of that. If they have the opportunity to check your ledger very well, they will bring out everything for you and add back. Okay, so let's click on proceed. We don't have any donation. We are not Father Christmas, so we are not giving to anybody. So let's assume we give this one to HOA for professional services. Description, let's say audits, Abi. And this one, let's say beneficiary, HOA.
Yes.
Then
HOA International. Yes, sir.
Yes, so we are going international already. So let's put this figure there
Yes,
as our T number. Then what is the corporate? Is it corporate or individual? It's corporate, Abi. So let's assume that our audit fee is 5 million naira. So we just put it there. So once we insert that, you click on proceed, it will take you to the next other deductions. So you continue to file all these. These are the makeup of your expenses. And by the time you look at it, you see that you are done with all the expenses for the year. And this is the expenses you have been able to file. And what is our total operating expenses? Total operating expenses . How many do we put? We put depreciation charge, we put this one. Okay, so this all we put, Abi. Okay, so we need to put bank charges, Abi. So let's put bank charges because bank charges have to be there.
Yeah.
So now, as we put the bank charges, it gave us what? The total.
It took us to current liabilities.
Sorry? Yeah, so it took us to current liability. It means you are done with what? With operating expenses.
Operating expenses.
So it is taking us to next schedule, which is current liability. So we now be taking it one by one. Do we have anything like accruals? If there's anything like accrual, maybe like our what do we call it? Our bill, Abi. So let's say it's 500,000. You add record. If you had more, so if you have more, let's assume we have there's always trade payable, Abi. So account payable. Let's assume our account payable is how much? 3 million naira. Someone said 3 million, so we are going for 3 million naira.
Please, sir, what's the difference between accruals and this account payable? What are the difference?
Sorry, can you take that again?
Okay, I said what is the difference between accruals and trade payable or account payables? Okay,
so the difference between accruals and trade payable is please. Okay, sorry. So the difference between accrual and account payable is simple. Accruals means payment for service you have enjoyed, but you have not paid for it.
Okay.
Example is your NEPA bill. You will notice your NEPA bill is always come after you have enjoyed it. The bill in January will come in what? In February. The bill in December will come in January. So you have enjoyed that service, but you are yet to make payment. That is what we call accruals. While trade payable is directly related to the business activities. Like audit firm now, their payable will be receiving let's use let's use like a manufacturing company. Their trade payable will be amount they are owing their suppliers for raw materials. That is trade payable.
Yeah.
Salary is salary payable. That salary payable will be under other payables. We have accruals, we have trade payable, we have other payable.
All right. Thank you, sir.
You cannot put it under current. Yes, you put accruals. Even you have to start with payables, that is trade payables, other payables, accruals. That one is different now. Salary, you can't accrue for you can put it like that, but don't put salary payable under accrual. You can put it under other payables because it's directly related to your service. Sorry, man. Okay. Okay. Yes, because they are directly to your service. Because that is what you are into. So they are real cost vendors, and you are owing them. That is trade payable. Are we good to go now? So after that, bring us to this place. Okay, so we have filed this. So let's assume we have another one. Is there any other thing we have here? Let's assume we have overdraft, Abi. All these things are just the same thing. Just click on it and file and click. So let's assume we have let's assume we have this short term. So let's assume it's also 500,000. So once you click on enter, it will bring it to the front, and it's giving us the total of payable to be what? 4 million naira. Abi. So once you are done with that schedule, all we just have to do is to click on what? Proceed.
Yeah.
So once you click on proceed, it's giving us long-term liabilities. So under long-term liability, you follow the same suit. If there is long loan over 1 year, let's assume there is 50 million, Abi. I hope our account will not be reading negative because we are just inserting anyhow. Okay, no wahala now. So let's click on addition, add record. So when you want to add record, what again should we think of? Should we pick director's loans? So let's click just one more. What is the time now? Almost 2. So let's click this one is 600,000. So you click enter it, and it will give us that. So from there, our total non-current liability is how much? 5,600. You click on proceed. Are we getting that? Then it took us to what we call the equity aspect of the account. So from there, we will click on what? What are the equity? We have what we call authorized shares and issued shares. So there are 2 different things. Authorized shares means how many shares you have available. Yes, approved. Then issue share means how many of these shares have been issued. Do you understand? So the one you are going to pick is the issue share. So let's say issue share is local equity. Value of the ordinary share, let's say is 1 million, Abi. Then share of the preference, if you have anything, not applicable. So you can see that it's bringing that one for us already. So once you click on enter, it should bring the total for us, 1 million naira. Are we good to go? It's immediately you click your revenue, your revenue schedule is the first schedule you are going to start with. Immediately you click on that naira, the whole figure you want to report are going to be in naira. Yes, no. Yes. You are going to adjust it here now. You are going to adjust it here. It depends, in your financial statement, you are going to have the value of the share, not a nominal value. Do you understand? So in the financial statement, it's not going to be nominal value. It's going to be the total value of the share. So that is what you are going to bring here. Exactly. Whatever you see on that audited account, that is what you are bringing here. Are we good to go? Okay, so no other thing, just click on proceed. I hope online are with us. So we have retained earnings. So what should be our retained earnings for the year? So under retained earnings, under equity, this is what we call the other equities now. So we have retained earnings, we have share premium, reserve, general reserve, and the like. So our share premium, our retained earning for that year, let's assume is 3 million naira. Abi?
Let's put 5 million. So, let's put 5 million, sir.
5 million naira. Okay, no wahala.
Yes.
So we are putting 5 million naira. Yeah. And you click on proceed. Let's assume there's no other thing again.
Okay.
If you check your audited account, audited account and you see it there, put it there.
All right.
Don't forget you are using your audited account. So whatever you see on that audited account, just put it here. No issue. Okay. Just click on proceed. It's very rare to see share premium on the, or those, except all these big companies that are listed on the market. You understand? Don't worry, that's another thing for that another day. Let's go to, after you click on proceed, it gives us the profits for that year. How much is the profit for the year? As you calculated it, congratulations, you are done with reserve segment. Continue with profit adjustment. Are we there now? So
yeah,
we come back to the nature here. If we look at it, you have inserted our depreciation for the year, but we are yet to put our profit for the year, Abi. We're supposed to be calculated immediately. So the depreciation is here already, Abi. Let's click on proceed. Don't worry, just look at it and let's go. Balancing adjustment. Assuming there is disposal of assets in the year. For those who have done taxation before, we understand what we call balancing adjustment. If you have not done it, you are still going to do that either in skills, professional, or yes, both skills and professional. So balancing adjustment is just when there's a gain on disposal, which is going to be calculated in the tax normal way. It's going to be tax dividend value minus the amount the sales proceed. Do you understand now? So whatever you have, if your sales proceed is higher than the tax dividend value, so what you are going to have is balancing charge. So this, which is the same thing as gain on disposal. So if there's anything, but based on what we have been doing since morning, we didn't recognize anything like disposal. So we just click on what? Proceed. So it means it's zero. And at the end of the day, this thing has calculated our profits for us on its own. And our profit for that year is how much? It's 8 million naira. You will now look at this profit for the year and what audited account is saying. If they're not saying the same thing, you will go and look at it where the error is coming from. But both must say the same thing. Because what you have been inserting since morning is the audited account. Yes. Are we getting that now? Okay, just hold on. I'm going to allow you to ask questions. Now, if there's anything, now you have 8 million naira as your profit. If your company is, if your revenue, like revenue we started was around 100 million naira, so how much would be our tax rate? What would be our tax rate? 30%. Anytime your revenue is higher than 100, from 100 million and above, is 30%. Are you getting that now? But if your revenue is within 25 million and below 100 million naira, your tax will be what? Will be 20%. Are we getting that logic? Okay. Then, if your revenue is below 25 million naira, your tax is how much? 0. You are not paying any tax.
Please come again, sir. Please come again, sir. Sorry.
Okay. If your revenue for the year is between 25 million and below, I mean 25 million to 0, you are not paying any tax for that year. Your tax rate will be 0. But if your revenue is above 25 million naira and below 100 million naira, you are going to pay 20% of tax. Then if your revenue is from 100 million naira and above, you are going to pay 13% on that particular revenue, on that particular profit as your tax. That is according to Finance Act 2021. So now if you apply 30% on this 8 million naira, whatever you get is our tax. Yes, that will be our income tax. Are we getting that now? Now, if there's any loss relief you have been carrying from the previous year, you will bring that tax relief here, loss relief here. So, but because we did not put anything like loss relief, so there's nothing like loss relief. But if you have like a 5 million loss relief, it means what you are going to be paying tax on will be 8 million naira minus 5 million naira, which is 10 million naira. So it means your tax you are going to pay for that year will be what? Will be lower than what you're supposed to pay initially, assuming there's no loss relief. Yes, before it was 5 years. But I think now there's an adjustment to it to 3 years now. It will expire. Okay. Yes, so what it means is that if you have loss last year, you know, this year we made profit. But last year you made loss of 5 million naira. So government will not ask you to go and pay loss, to go and pay tax on that loss. You will not carry forward here. Now, this year that you are making 8 million naira profit, instead of paying tax on that 8 million naira, they have sympathy on you that since you made loss last year, remove that loss you made last year from this 8 million profit this year. So you now pay tax on the difference. However, let me finish it. However, if you make loss in a year and your profit, your revenue in that year is more than 25 million naira, that is, you are not paying zero tax. You are going to pay minimum tax. So if you make loss, that does not make you not to pay tax yet until you calculate your minimum tax. You now pay, yes, you pay on that percentage. Okay, so that is the question. And no problem. And that's what we call tax audit now. So after tax audit, you have done your own. Then they now do their own review. They notice that what you have provided in the account is 20 million naira. And what they calculated based on their own review is 30 million naira tax. Abi? So they will now they will send you additional adjustment assessment, which is 10 million naira. So you have 30 days to reject that or accept it. So within that 30 days, when they send you additional tax of 10 million naira assessment, if you are not clear with it or you have documents that you can use to defend yourself, you reject it and appeal it. But after 30 days, you not reject, they send you 30 days. You are looking at that 10 million naira. As an accountant, you are still moving around, enjoying yourself. So it means the company will pay 30 million naira. You will pay that additional 10 million naira as tax. If you don't have documents to defend yourself. And you can take them to the court. It's not mandatory now. You can decide not to have your own tax. You can decide not to have tax consultants. You may decide to have your own tax consultant. There are some companies that have all departments in that organization. They have account department, they have internal audit, they have tax department, they have finance, they have accounts. You know, multinational, that's the standard company. They have all departments. So if there's any issue with tax, the tax go for that. If there's any issue with internal audit, or the internal audit, go for that. Tax people in your department. Wait, oh, you that no, wait. Let me tell you, like Dangote company, like Dangote, do you think they will not have all the 3 departments I just mentioned? And those people they are going to put there, they are going to be chartered accountants, professional, those who and taxation, those who have experience. Do you understand? That anything happen, they will go and defend it. For Dangote to build this road from Apapa to, do you know the reason why they build the road? The agreement between the Dangote and the federal government is that we are using the tax we're supposed to pay you to build this road. You know those people that sit down and put that bridge together, that let's use that money to build this road. Okay, I'm with you. Exactly. So different segment, different section, different department, and do everything on their own. Yes. Question is ongoing. If you have question of online, you are free to ask. Whatever. Okay. Yes. Tax. Yes. No. Before you can, if you still resort to loss, you pay minimum tax again. It's law relief now. The loss continue. Yes, now. Yes, now. As long as you don't make profit last year, no issue. And even not only because you make profit. Anytime you are calculating tax, you must calculate both minimum tax and normal tax. You will pay higher of the two. Do you understand now? You pay higher of the two.